Thursday, March 15th, 2018, Monaco 64, home of alternative economics and contrarian views. We're going to look at the markets as usual. It's 10 past 8 London time. And then I want to show you some charts of gold and silver and why you need to be patient as a stacker of gold or silver. It will be the ultimate insurance of the storm that's coming, the monetary mayhem. And I'll tell you why I believe in that as well, the fundamental reasons and the technical reasons. So first of all, the markets. Spot gold right now, 1324.40. So it's unchanged from the late close on the COMEX yesterday. The range has been 1328 to 1323.50. Silver 1653, unchanged as well. And very narrow range, 1650 to 1659. The Dow is up 88. We've had 3 straight days of drops in the stock market. We're now at 24,848. So we're up 1/3%. S&P 2755, up 6 or 1/4%. NASDAQ is unchanged. Sterling is up 0.1% at 139.80. The euro is unchanged at 123.67. Dollar yen is down 1/4%. The dollar is down 1/4% against the yen at 106.06. So from being above 107 a couple of days ago, we were almost, we'd broken through 106 earlier overnight. We went down to 105.77. The bond markets yesterday rallied. The 10-year yield dropped to around 280. Right now we're around 282. So, you know, that yield is still under control for now. So what about gold and silver? I said that they're going to be the ultimate stores of value. They will protect your wealth that you've accumulated. And if you've been able to accumulate wealth, you know, not all of us are able to do that these days. You know, a lot of people have debts. But if you have something to protect, it will be the ultimate form of protection. And that won't be as an ETF. That won't be as mining shares or mining stocks. That won't be as, you know, a spread betting position. That will be as holding the real thing. Because there's no, you know, you need to be outside the financial system. And why do I say there's going to be monetary mayhem coming? You know, I've talked to this many times over the last couple of years since I started this YouTube channel. But to those of you who are new to the channel, the reason I see that is because the creation of debt we've had since the financial, well, even before the financial crisis, you know, before, you know, you go back to 1980, the national debt of the US was 900 billion, just below $1 trillion. And ever since then, we've had a massive growth in debt, a national debt, in credit, mortgage debt, everything, not just the government, but corporate, you know, individual debt, you know, consumer debt. And what's allowed that to happen? Well, the manipulation of the of interest rates by the central banks, by the investment banks, the banks that basically work together with these central banks. We had, this system was almost breaking. It was going to collapse because it's not sustainable back in 2008. But they still had some ammunition to keep it going. They've kept it going for another almost 10 years now, and they've doubled down. You know, it's like a drug addict had a overdose, almost died, and he recovers and he goes back to his old ways and gets even worse. And at one point, that person will like collapse. And it's the same thing with the system. And the debt, the deficit, budget deficits, the consumer credit, the corporate debt as well that's been used now to do the corporate the buyback of stock or shares by by big corporations. It's a huge cocktail of debt, and also the central banks. They've been doing the same thing. Who do you think the central banks put this debt upon? This money printing. It's all backed by the national debt that we have to carry. But there will definitely be a revulsion to that debt. We've had consolidation in gold and silver for the last few years because they've been able to, save the system. They didn't save it though by doing the right thing. What they should have done is let the patient, die, in my opinion, back in '08, and then start a new system. But they didn't. So that's why I want to have a look at these long-term charts, and I'll start with gold. And these charts are quarterly charts. So the gold chart here, it goes back to 1970. And it's not a logarithmic one, the gold. It's just a normal arithmetic chart. And you can see there, the top in 1980, there's even a trend line that goes to the top in 2008, which was around 1032. And that was the day where Bear Stearns had to, if I don't forget, well, that was the day Bear Stearns had to be bailed out by, JP Morgan. So we had that high, and then this crisis started, and then by the fourth quarter of '08, gold actually had dropped to around 680. But you can see that, from there, it shot up to almost 2019, 20 roughly was the high. But you see that trend line there from the high in 1980 and the high in 2008. If you draw a trend line there, you can see that the low in 2015 was just around that line. It looked like it held really well. But one thing that interests me more in this chart is the fact that we have this falling wedge from the highs, and this is what we've been forming. It's a consolidation pattern, the falling wedge, since that high in 2011. I think it was September, I'm not sure. And the upper trend line has actually just been broken this year. I've measured it before, and it had, on the daily or weekly chart, but doing the quarterly I think is better. And you can just see that that line actually right now comes in around 13.15, and I think that's why we've had pretty good support around that level lately. And the fourth quarter, the high in gold was 13.07, fourth quarter last year, and the low so far this quarter is 13.02, which was recent. So we basically closed the gap there. I think there was a gap before that. And right now we're just above that line. So to all of those who have, who are sick and tired of waiting for gold and the gold price to do what it should, I think we're just about to do that. It looks like it's breaking out here and looking very, very interesting. And who knows what the, I'm not going to make predictions for prices. It's very difficult to say, where gold is going to go in the next few years, but I think it will be a lot higher than this previous high at 1920. So, and it just goes to show that gold is looking good quarterly. I do cover the market every day, and sometimes it's frustrating seeing the moves, short-term moves. But as a long-term, holder of gold and silver, you need to think of it as more as an insurance and not as trading. So what about silver? Did the same chart, quarterly chart, going back to 1970. And for the silver, I did a logarithmic chart. because it gives you a better idea of what silver's done, because it's so volatile in the normal chart that this looks better percentage-wise. And you can see there the high in 1980, the high in 2000, let's see, 11, second quarter 2011. We form a teacup, and this is called a teacup and handle formation, which is a rare formation. And we've been forming this handle since 2011. And it's just about to, well, ready to break out as well. And usually the objective is like the depth of the teacup, you know, extrapolated from the top of the teacup, up 10 times on the teacup. So you could argue that if we go up 10 times, being a logarithmic chart from the teacup, we could go to 500. That would be really interesting. You know, all the years of this fiat money delusion we've had since 1971, and especially, you know, after 1980, when they really started getting the debt going, pay for it later. And I think that's what we're gonna get. What will trigger it? I don't know. I think maybe this latest the fiscal situation in the States could do it. I know President Trump appointed a new economic advisor. I know I remember watching CNBC back in the 90s, early 2000s, and yeah, Larry Kudlow. What do I think about him? I think he's a loose cannon. Yeah, he's more of a salesman. So the king dollar that Larry Kudlow says we have nowadays is nothing but an impostor. We all know that the dollar constitutionally is a weight of silver, 371.25 grains of silver, fine silver. What we have now is an impostor called the Federal Reserve note, which is based on debt and financed by you, the taxpayer, and that's happening everywhere else in the world. You know, here in the UK, we've got the Bank of England note, not really sterling. It's just an impostor for real sound money as well. What about cryptocurrencies? Well, cryptocurrencies are gonna, I know we've had you know, it's been correcting quite a bit lately, but you know, it's the future, the blockchain. So there's going to be a lot of fortunes to be made, I think. A lot of money to be made, but a lot of money to be lost as well. You need to be careful, do your own homework, and yeah, make sure you only put in what you can afford to lose. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on steemit.com and on Twitter. I'll talk to you later. Bye.